Hi guys, my name is Ethan and welcome to my investing channel. Was Tesla Battery Day a disappointment? Let's find out together in this video. First of all, I'm crazy happy now that Tesla share price took a dive to $380 but went up to $407 on Friday, likely due to some positive news on the second stimulus package. On the 8th of September, Tesla's share price went down to $330 and it then quickly climbed up to $450 in a week's time. That is probably due to the doing of short-term traders, and likely this will happen again if there is no adverse or catalyst news for Tesla. This week, the market had taken a hit mostly due to the fear of COVID-19 second wave in Europe. Affected countries like Belgium, Italy and the UK are among the worst hit countries, while in the States, I'm still not quite sure what the government is doing. And specifically for Tesla shares, it has taken a hit mainly because it was a miss in expectation. Why wouldn't it, right? I mean, look at the share price. It has gone up by 484% just this year alone during peak. You can imagine investors must have been so bullish about the company and expecting the company to announce something like an Iron Man technology that will profoundly change the electric vehicle industry. Don't you think everyone has just gone way beyond reality? My personal view is that Battery Day was not a disappointment. However, the attention for Battery Day for most people would have been on two magic numbers, which is the $100 per kilowatt hour and million mile battery. First off, the Elon Musk said he will be able to achieve the battery cost of $100 per kilowatt hour. Yes, he did, and he expects to be able to do so in 3 years. He is working towards it with a plan in place, and mind you, the plans laid out on Battery Day is quite a solid one. Not some fluffy vision over the air talk by some CEOs. The price per kilowatt hour have been falling drastically over the last decade, from $1,100 per kilowatt hour in 2010 to $150 per kilowatt hour in 2019, a drop of 87% no less. Now, Elon Musk said Tesla will have half the price per kilowatt hour by kickstart a 3-year process. Elon Musk has actually announced quite a few innovative changes during Battery Day which will disrupt the industry moving forward, especially on the changing from wet to dry cell battery electrode processes and the introduction of tabless design. Besides that, Elon Musk also shared that the Giga Shanghai was built from scratch to production in just 15 months, and to produce over 500,000 vehicles per year. But with expansion, it can produce up to 1 million vehicles per year. Giga Berlin and Texas both are capable of producing 500,000 vehicles per year, but there is some whispers that Giga Berlin is aspired to go from 500,000 to 2 million production capacity per year. Elon Musk also mentioned that for Giga Texas, it is happening even faster than Giga Shanghai. Mind you, the land area for Texas is around 2,100 acres, while Berlin is around 740 acres, and Shanghai is around 210 acres. So, Gigafactory Texas may eventually be scaled up to even more capacity, but at this point of time, it is still everybody's guess. Elon Musk also brought up that their goal to achieving 20 million vehicles faces a huge problem today, and that is the battery factories cannot scale up fast enough. You can see the presentation provided 20 terawatt hour will require 135 gigafactories. And at the site, you will be able to see $2 trillion investment, which is a huge sum of investments to be poured into the factories. If you spread the investments over a 10-year period, which means Tesla will require $200 billion per year of investment. So, I think the 20 million target may be considered optimistic if they expect it to happen by 2030. Hopefully, they will be able to figure out something on this front. This is also probably, in my opinion, why overall Wall Street analysts consider the event as a disappointment, because they may have projected that Tesla is able to hit the 20 million vehicle per year soon. Like I said, they are all high. I wish I knew what they were smoking. My point is, Tesla seems like they have quite a clear plan on how to scale up to 20 million vehicles per year, and they are constantly looking at ways to improve production efficiency, which will reduce the cost to build Tesla vehicle. and Elon Musk also shared their 5-tier approach to reducing the cost per kilowatt hour. Each tier involving innovative solutions to their processors, and thus finally be able to bring down the price to $25,000 per vehicle, which is like Camry or Accord level. Very affordable range for majority of the US citizens. Given the option, I would definitely go for Tesla purely for its reduced carbon footprint. Not to mention in terms of specs, Tesla is on a whole new league. My point is that this will take time, likely 3 years, and I strongly believe Tesla can do it, and that Tesla's cost reduction will be key to their success. If you wish to understand more on how likely Tesla can achieve its target, check out Cleaner Watt or Tesla Daily channel, both of which talk more in depth on the technicalities on the production of batteries and how likely it is for Tesla to achieve its target after understanding the presentation from the Battery Day. Another reason for the disappointment is possibly the failure of Elon Musk to address the million-mile battery. The reason is probably because this is going to take some years, but if he was to announce it now, it may deter people from buying Tesla now, because if million-mile battery is launched, I can foresee the second-hand value of Tesla for the old models will drop substantially. So it may be part of his strategy to keep something up his sleeve. Let's run through some of the production numbers and see if Tesla indeed is able to meet the target production of 20 million cars per year. This is what I know so far about the production factories. Fremont, their original factory, which will be able to ramp up production to 500,000 vehicles per year. Then we have the Giga Shanghai, which will be able to produce 500,000 vehicles per year in 2021, and Tesla is going to expand the factory to cater for another 500,000 vehicles, and target completion date is in 2022. So we will have in total 1 million vehicles per year from Giga Shanghai. Next we have Giga Berlin, which will be ready by the end of 2021. So let's assume production in 2022 and it will be able to produce 500,000 vehicles per year. Lastly, Giga Texas. This is by far the largest area to be occupied by this factory, originally occupying around 2100 acres as compared to other factory, but on Friday an article found in Electrek states that the automaker acquired another 381-acre piece of land next to the current Gigafactory construction site. Tesla is also reportedly looking at another piece of land nearby, and the article further states that the Giga Texas is expected to be more than an electric vehicle production facility. So it will likely to experience similar expansion by phases like the one we see in Shanghai. Looking at the numbers, Tesla is likely to cater for about 2.5 million vehicles in 2022. So what about their orders now? Elon Musk said that the growth is likely to be at 50% for 2019. Take a look at this chart by Tesla on Battery Day. Tesla is seeing growth around 17% while the rest of the car manufacturers are seeing decline in growth due to the global pandemic. The crazy demand for Tesla models will likely to last for quite a number of years to come. So just some additional note for myself, it seems Tesla should be able to reach 20 million vehicles per year in year 2029 with 50% growth every year. So why do I use 50% growth, which is the growth in 2019? And do I think they will be able to sustain the growth rate for the next 10 years? No one will have the answer, right? But my guess is they are able to do it because they have the Cybertruck with huge pre-orders. This will likely to sustain the 50% growth until 2023, where the battery cost will be half and hopefully Tesla models will be reduced to 25,000, which will be the game changer for Tesla moving forward. Possibly also help Tesla to penetrate into the Asia region for expansion. The demand for electric vehicles in Asia regions is growing quite rapidly as well, with clean energy slowly getting into the minds of the people. So all in all, 50% growth does look like somewhat a realistic growth rate. Of course, this is a tall order, and if this is being priced into the share price now, any negative deviation to the plan will definitely shake the price by quite a significant amount. This is a high growth company with sound plan, but high growth does comes with high risk. So this is definitely not for the faint-hearted. Another important note, Elon Musk shows a slide where Tesla will require $20 trillion to invest in 135 factories in order to achieve the 20 million vehicle target, which he said it is not feasible, so Tesla will have to come up with a better plan. $20 trillion divided by 135 factories, around $14 billion per factory. This is a huge investment. So securing such a huge investment may pose a great challenge to Tesla. Now, translating those numbers into the valuation model. Now assume a 40% growth in automotive sales in the next 6 years instead of 50% to be prudent, because their pricing may reduce and hence the revenue may not be as high as 50%. But 40% is really just an assumption. I also assume that they are able to improve their gross margin for the next 2 years until the battery cost is half, which they are able to further save 5% and the rest pass through to the consumers by lowering the selling price. If you take a look at their financials, you will notice that their service and others is actually loss-making. I have assumed moving forward, it will slowly move towards a break-even model. Essentially, this acts as a support service for the vehicle sales. Lastly, energy generation and storage. The amount is relatively small, so any growth rate wouldn't impact the valuation model much as long as it is within a reasonable growth rate. So I've just assumed a 10% growth. One of the key assumptions of the DCF model is the terminal value. I am using average of Gordon growth model and EV/EBITDA multiple. For Gordon growth model, I have assumed a perpetual growth rate assumption of 5%. This is just something I think Tesla can achieve in the long term after their market shares hit a plateau. As for EV/EBITDA multiple, I've assumed a 25. Currently, Tesla EV/EBITDA multiple is at 107 compared to its peers, which ranges from 11 to 27. I would go for EV/EBITDA of 25, which is a more realistic number because this is what all other mature car manufacturers is at. So when electric vehicle becomes a norm in the market, the EV/EBITDA should be around 11 to 27. I use 25 because I believe Tesla will be the market leader, hence is able to fetch for a higher price. Finally, the DCF valuation model arrived at $800 per share. Now, let's take a look at the PE ratio. In 2022, Tesla PE will be around 63, which is still quite high because the average PE for the entire market is around 25. And you can see that around 2023 and 2024, the PE taper down to a very reasonable level, which I believe Tesla share price will increase tremendously when investors start to realize Tesla is able to deliver and the share price is relatively cheap for such a remarkable achievement. Now, I have also looked to the expert ARKK, who is known to be the Tesla biggest supporter. I have noticed that ARKK is again buying up Tesla shares this week, when the share price falls to $380. Last week they were selling off some Tesla shares claiming that Tesla exceeded their ideal portfolio weightage. But now they are buying. So I guess ARKK is of the view that anything below $400 is a bargain. And I couldn't agree more. I would try to grab anything below $400 if possible over the course of next week. And I will hold out until the next quarterly earnings or major announcement by Tesla to reassess my valuation on Tesla. If Elon Musk is able to keep his promises and the $25,000 electric vehicle is able to be delivered by 2023, there should be some excitement to the stock price around 2022. In summary, in my opinion, Tesla share price should hit $800 within 2 years, with ROI of 50% per year. This is definitely a risk that I'm willing to take. I think if you are bullish on electric vehicles, going for Tesla, who is the leader in the field, chances are 9 out of 10 you won't go wrong. But of course, there will always be the 1 in 10 chances that Tesla does not do well. Just like any other investment in the world, it comes with risks. So for Tesla, in summary, I will grab anything below $400 and stay tuned to its development. I hope this video shed some light on what the expectation of Battery Day and its share price moving forward. Again, I may be wrong, and if I'm wrong, I will lose money. So if this is a risk I'm going to take, I need to be ready to lose quite a substantial amount, probably to $300 level. But if I am right, I'm going to enjoy the 50% ROI per year. Now, if you enjoyed the video, please give me a thumbs up, subscribe and comment below. Thank you and bye bye.